Welcome to TradeTheMBI.com. My name is John Morgan, and this is an ongoing series of tutorial videos detailing the unique indicators that I've created. What we're looking at here is a typical chart that you would see if you follow us on Twitter at TradeTheMBI. You will see this, and or if you're a member of our daily, nightly video service. Here you have the S&P 500, and within this upper graph we have price as it's reflected by candlesticks, our extreme histogram, and if you haven't seen those videos, I do recommend you watch those. Along with that, the shakeout indicator, which is one that we're going to begin detailing in this series as we go forward. What we can look for from the shakeout indicator, why is it different than the extreme histogram? What we get from the shakeout indicator is a little bit more depth of trend. We get details on the commitment of traders to that trend and the intensity with which they plan to react to movements in price. And how many times have I been asked from traders, how did I know it was going to turn? Why is it that I knew that the market would flip at this point when others didn't? It's not me. The indicators pretty much give us a description of what large players are doing and how they're positioning themselves. And it becomes particularly valuable when we get divergences in the indicator where price is rising and yet we're getting the opposite move from the indicator that's telling us that in fact the move is false and that they're really just pumping it in order to either get out or they're selling it hard in order to buy more shares. If we go to isolation chart where we have just the shakeout indicator with our overall extreme histogram, we can begin to look at some correlations. Now I've gone ahead and put some up arrows where the buy signals would be, red arrows where the down signals would be. But then further, as we get more involved in understanding this indicator, you'll begin to realize that we can actually create trend lines from it, support and resistance lines that are based not on a particular price, but they're based on particular moves. And as I explain more about what I believe the market is more about, particular moves that position traders have taken, and they're going to move the market to get to those specific targets within their projection. So it's really irrelevant as to what you think a support and resistance is. How many times have price just blown through one or exceeded one and leaves you scratching your head? Well, why did that happen? Well, more often than not, we can see these moves, particularly right within a series of ranges that have been predetermined by some very large players. And if you're able to identify what they're doing, you're able to stay within their trend and or exit when they're about to leave their trend. And it makes for a lot less panicked trading, particularly in a range like this that we've seen after a large sell-off that quite a few people just weren't expecting. But there were plenty of signs that led the way. So in the next couple of videos, strap on, get ready, and be prepared to look at the market in a very different way.